Hi guys, so I want to do a short video about cryptocurrency and Bitcoin and how it gets taxed. So just in case you're new to my channel, I'm an accountant. My name's Stephen Edwards. I'm the director of a firm called CTA. We are an accounting business that provide tax and accounting advice. And being an accountant and running my own accounting business, we're getting quite a lot of questions about cryptocurrency and how is it taxed, and lots of people want advice on that. And to be honest with you, I've seen from other accountants actually getting quite confused. And if I'm honest, I think people are probably overcomplicating the tax side of crypto. I'm not saying it's not complicated. I'm not saying it's easy. You shouldn't seek professional advice, but I want to help people understand the basics, because the basics is really nothing that new. So you need to sometimes cut through the noise and simplify it. One of our core values is KISS. KISS stands for keep it simple, stupid. So we try to keep it as simple as possible. Right. So when I talk about crypto, what am I talking about? There's something like 14,800. There's almost 15,000 different cryptocurrencies around the world at the moment. Some of the big ones we're all aware of. There's pretty much the top 10, even the top 5. Bitcoin obviously being the most well-known, the most famous type of crypto. And I'm not going to go into why there's so many cryptos and what they all do, because the thing they've got in common is they're generally intangible. They're not something we hold in our hands like a piece of paper. That's probably a topic for another day, actually, because we have had a specialist in our office to do a short workshop sort of discussion around Bitcoin specifically and how it compares to other cryptos, but that's not for today. So we're talking about non-physical sort of assets, so intangible assets. So generally, most of the time is Bitcoin, but there are some other big ones, Ethereum that people, etc., that are covered. So in simple terms, let's talk about the basics of tax. And this is a bit of a whirlwind tour really for you. So the basics of tax are, you've got two main types of tax. You've got income tax and you've got capital gains tax. Income tax is your normal income you receive that's regular, each year. And it's generally liquid type income, so something you receive, not something that comes out of a kettle, but it's something you receive on a regular basis. So for example, if you own a property, if the property goes up in value, that's not liquid. You don't see that value, do you? It's tied into the house. If, however, you own a property and you rent it out and you receive rent, that falls into income tax. So the rent falls into income tax. If, however, you own a property and you sell the property, that falls into capital gains tax. So it's to basically, income tax is normal employment income, dividend income, rental income, self-employed income, all that sort of stuff. Capital gains tax is when you sell an asset, you sell a house, you sell your crypto, your Bitcoin, etc. So they're the main two different types of tax. So what causes confusion is crypto can cover potentially income tax and also capital gains tax. Very similar to property. Just think of it like property and shares. When you own shares, you receive a dividend. That's your income tax. When you sell your shares, if you've made a gain, that's capital gains tax. Same with crypto. So in essence, that's all it is. So where could you get the different scenarios when it comes to crypto? Well, if you're selling, if you've sold some crypto, say some Bitcoin, and it's gone up, let's say you paid £25,000, it's now worth £35,000. You made a £10,000 profit on your Bitcoin. Obviously, I've made up those numbers. It depends on how much Bitcoin you hold, etc. But that's where you potentially are subject to a capital gains tax liability. Is you've bought it at one price, sold it for a higher price. Typically, it's capital gains tax you're going to have to pay. Very similar to shares. This is where I've seen that a lot of accountants, in my opinion, are confusing this and making it more complicated than what it needs to be. It's at the moment, in simple terms, it's pretty much like buying and selling shares. I buy Bitcoin at one price, I buy shares at one price, I sell Bitcoin at another price, I sell my shares at another price. It's very similar. Where it gets the waters get sort of muddied is if you're buying and selling lots and lots of Bitcoin, it can on some rare cases it can be classed as a business. Technically, it's like you're self-employed. You're trading Bitcoin. If you're buying and selling so much Bitcoin, a bit like a day trader for shares in the stock market, you could potentially be treated as a self-employed person, as a business with your Bitcoin or your crypto, or so I'm not just talking about Bitcoin. But to be honest, that's quite rare. If we talk about shares, it's very rare that people have got a business when it comes to shares. Typically, it still falls within capital gains tax. So most of the time, and HMRC's guidance suggests this, most of the time it's going to be classed as capital gains, but it can also potentially be income tax if you're treating it like a business. That's it in simple terms. Other things to think of, and this is a question we've been asked, is if you've got it within a platform, so you've got within a fund, some sort of wallet, for example, or some sort of exchange. So if you think of shares, I can buy and sell shares through a bank, through say NatWest or Barclays. I can have a share portfolio through them. But I'm actually buying different types of shares. I might be buying shares in Sainsbury's, shares in Apple, shares in the FTSE 100, but I'm facilitating it through my bank. They're my fund, they're kind of my exchange. They're facilitating me buying and selling the shares. You could have something similar with crypto. You could have a wallet or an exchange, and it enables you to buy and sell your shares. Some people have the opinion that if I've sold my shares in my fund, let's say I sell my Bitcoin, I use that money to buy a different type of shares, that's not a taxable event. In my opinion, it is a taxable event because it's like basically saying, I've sold my shares in Sainsbury's, I've just made £10,000, I'm now going to buy shares in Just Eat. Two completely different things. So as soon as I sell my shares in one asset type, I'm crystallizing a gain. So in simple terms, that is generally what's going to happen. It can be more complicated. There can be genuine exchanges where it's not taxable, but they're probably not going to be the norm. So most of the time, if you're selling one asset and you're buying another, within your portfolio, there's a capital gain. Just because you've not taken the money out doesn't mean there's not a capital gain. So hopefully that's made you a bit more well-informed, a bit more clued up. These videos are not about selling our services, it's educating people. Naturally, if you want our help, we can help you. So if you have got any questions, feel free to pop me an email, Stephen with a PH at Cheltenham Tax Accountants. That's CHELTEN for November, H for Hotel, HAM, Cheltenham Tax Accountants.co.uk, or just do a comment below, or get in touch with us and we can give you a bit more sort of guidance. But hopefully that's been useful. Thanks guys, cheers.